Hi, in this video I want to have a chat with you about investment property. I've been getting a lot of questions off people about how they set up an investment property for themselves and what's involved from mortgages and to paying tax are mainly the questions I'm getting. So let's first of all tackle the mortgage. If you want to buy an investment property, a bank will typically lend to you at a loan to value of 70%. That means you need 30% to go to the deal. In COVID times, in our current times, banks are looking for about 40% from you and they'll give you 60% from a loan to value point of view. That's just that the banks are trying to de-risk as much as possible during COVID-19. After COVID-19, I expect them fully to go back up towards the 70% and 30%. Now, what should you do? If a bank would lend you the 70%, that sounds like a good deal. I don't think so. I prefer clients to have at least 50% loan to value. So I want you to have 50% of the money and maybe borrow 50% from the bank. And the reason from that is a couple of reasons. First of all is the amount of mortgage you're going to have to pay, and second of all, the amount of income tax you're going to have to pay. And actually there's a third reason, the amount of time it takes you to start making money out of a deal. If your mortgage is too high, let's say an example that you have a 70% loan to value, and don't forget mortgage interest rates, just to say as well, are always higher in residential investment properties than they are on a typical personal mortgage. So you might get a typical personal mortgage now at 2.3 to 2.8%, but investment mortgages typically start at about 3.8% and go right way up towards 5 and 6% with some lending institutions. So they're already very expensive. So when you have rental income coming in, your rental income comes in, you have to pay your mortgage, and you also have to pay the tax man. So every time you pay income tax and you have a rental property, you have to pay income tax on the income that comes from the rental property. So if you're on the higher rate of income tax, you could be paying up to 50% on your rental income that's coming in. So an example where you buy a property and let's say you have, I say €1,800 per month coming in and your loan is €1,200 per month, as in your mortgage, you might think that's great, I'm going to be up €600. You're not, because you're going to be paying almost nearly €900 to the revenue commissioners. So that's a different perspective. Now you have a property that's bringing 1,800 rental income coming in, but you're paying 900 to revenue, which means you have 900 quid left over. But your mortgage is €1,200. So now you're supplemented, technically speaking, by 300 per month, or 3.5 grand a year. Now that might sound okay to some people because they're going to say, well Paul, in 20 years time, the mortgage is going to be gone. But every 10 years it's going to cost you about 30 grand. So over a 20-year period, it's going to cost you 60 grand just to keep up with things. Rough figures. Where I think if you have a 50% loan to value, in most of the cases I've done, and most cases I deal with clients from a financial planning point of view, 50% loan to value is just about fair value where you get a little bit of money, there's a little bit of money there to pay the revenue commissioners, you and the mortgage company throughout the 20-year period while you're paying down your rental property mortgage. So when it comes to rental properties, it's very important therefore to have a really low loan to value if you can, and make sure you keep it on top of your taxes. Now, why is rental property so important, or why is everybody talking about it? Well, typically speaking, when you clear your mortgage, you're going to have what's called passive income. So passive income is a big term you're going to hear everywhere on the internet these days. It's basically income that comes in while you're sleeping, or basically income that comes in you don't have to get up and go to work for. And that's what rental income is. It's probably the most well-known income stream for passive income around the world. So from a passive income point of view, while you're sleeping, you're not going to work, somebody's renting a house from you and they're paying you income. So if you can get 2 or 3 properties together by the time you get to 55 or 60 years of age, and they can all be mortgage free by the time you get there, you could have 4,000 to 6,000 a month coming in, passive income wise, before you go to work. And that would allow most people to give up work and have a really good living standard into retirement age. So that's why it's a good idea to hold these properties, but I just want everyone to be aware that you have to have the right balance from a loan to value point of view to make sure you're not paying too much money towards this over a 20-year period. Because otherwise, if you're not making some money now, you're basically going to be collecting for the mortgage company and the revenue commissioner, and you're not getting paid for 20 or maybe even 25 years, which doesn't sound too attractive. Now, when I do my financial planning with my clients, and for those who have gone through the financial planning journey with me, you will know that by the time you get to 50 or 55 years of age, or 45 to 55 years of age really, you should be looking at about 100 to 150,000 in an investment fund. And that be the Aspal Investment Club or another strategy. And the idea is that when you get there, you have 150,000 and you might borrow 150,000 from the bank at say 45 years of age, you buy your 300,000 property, you pay it down by 65 and you have your passive income coming in. If you're lucky enough to have a large lump sum of money, before that age, maybe at 30, 35 years of age, you should be able to follow the same path, be mortgage free by 55, and then maybe use that mortgage free property to buy another 1 or 2 properties and have them cleared by 65 years of age again. And these are the type of things that we take clients through in our full financial planning consultations. If this is something you're interested in or serious about, please do consider giving us a shout, and please consider going through the financial planning journey so we can help you with these plans and teach you everything you need to know. You'll find a link to booking in on my Instagram linktree, or else you can go directly to the askpaul.ie website. I hope this video has added value, and please like and share. Don't forget to tag somebody that you think needs to see this. Thanks and have a great day.